Yeah, President Trump said he might consider launching an attack within 2 weeks. I mean, if that happens, could we, see some serious escalations here and prices get close to that 100 US a barrel?
Yeah, certainly the US is the wild card here. And while we don't know how Iran would retaliate, certainly there are scenarios, as I said, where they could try and hurt the US by pushing oil prices higher. And clearly disrupting supplies would be a major factor there. The amount, as I said, could be quite significant. So, that really worst case scenario that the Strait of Hormuz is completely blocked, then, there's no manner of, supply that would be able to replace that quickly. And so, we would see a significant surge in prices. But as we've seen in previous sort of geopolitical events, once these things are over, the prices tend to pull back relatively quickly. In fact, that length of sustained high prices seems to be getting shorter and shorter these days. So we would expect, once the tensions ease, that things would come back to a little bit more normal.
All right, let's move on to gold because it just seems to be going from strength to strength. What's really driving the gold price at the moment? Is it that uncertainty?
Yeah, well, certainly the geopolitical risks certainly, give a fair bit of support to investor demand, which at the moment has sort of filled in the void that has been left by the prospects of rates by the US Federal Reserve staying relatively high. And I think the concern around what tariffs might do to inflation have certainly seen the bets on significant rate cuts fall quite sharply. And so that has certainly taken a little bit of gloss off the investment demand sort of cycle for gold. But clearly those geopolitical risks are certainly adding to that haven buying at the moment. And while we haven't sort of seen it push to record highs over the past few days, it's certainly very supportive and will provide ongoing sort of levels of support, we think, for the foreseeable future.
And then iron ore, our big commodity. Exports seem pretty high at the moment, but what's happening with demand from China?
I mean, we've seen, the property sector there really weigh on steel demand for some time now. And while some of the other sectors are certainly providing a little bit of support, the sheer size of steel that is consumed, and thus iron ore in real estate, creates some significant headwinds for the market. At the same time, we're starting to see exports build up, certainly out of Australia, but also out of Brazil. After some disruptions last year and earlier this year, things have certainly improved, and so supply is certainly becoming an issue there. Amidst all that, the Chinese government is also trying to weed out some of the excess capacity in the steel industry, and so they're looking to implement or force some of the steel mills to actually close or reduce output, and that's obviously going to weigh on iron ore demand as well. So, that's going to be a bit of a headwind for the market in the shorter term.
Daniel Hynes from ANZ, thanks for coming on the show.
My pleasure.